Hey guys, it's a market update and an important one, I think, because it seems like we're done for now, right? It's over for now. What I mean is the post-election wave, the euphoric wave that came in, it was a 80% move, right? We're still up 67% from that. It's been a fantastic year, but the Fed came out this week and we know that they control everything short term. They control the price of money, the supply of money. They control how the banks take risk, right? So they came out and said to the market, look guys, calm down for a bit, right? We had a great year, right? What we wanted to happen happened, which was inflating the system again, but just calm down. Let's just take a breather and then we'll go again next year. And that's what they said, and that's what the market is doing. Now we have this shutdown in the States of the spending bill, so risk off a little bit and calm down, come back in the new year and see where we go from there. So this is healthy and good, right? Shake a few people out. The bull market is not over in any way. We can see actually that this drawdown is tiny, right? The max drawdown this cycle is 32%. Previous cycles a bit more than that. So we're still a long way from a potential 10% down, right? So we can go lower for sure, but buy dips in bull markets, absolutely. Now, if you do trade, check out Bybit down below. You can get 30,000 as a deposit bonus. If you trade from your crypto wallet, just go on Apex as well, which is Bybit's DEX. You can trade futures and spot on here just from your wallet. It's easy. This, I think, is the future, to be honest. 5% fee discount on Omni as well. We've had an absolutely brilliant year, right? I mean, the returns have been fantastic. Now, returns in risk assets, we're essentially pricing in the fall of fiat currencies. This is important. This is why I focus on BTC. Is because there are many trades out there that are going to outperform Bitcoin. I'm not saying Bitcoin is going to be the best performing asset in percentage terms. It definitely won't be. Every cycle, there's a new trade. It's going to outperform. But I've been in finance a very long time. I used to help people invest, right? I used to work professionally. I used to have to sort out people's investments and actually help them provide for themselves over their life, right? And so why I call Bitcoin the trade of our generation, right, or the sweet spot trade, right? It's the best risk-adjusted trade because you have to know what Bitcoin actually is, right? It's not a speculation. Bitcoin is the least risky thing. It's had all the risk stripped out of it. It's not an equity. It's not debt. It's not a security. It's just a diversified index. Everyone that uses BTC to store their wealth and spend their wealth over time, that's who you're indexing. Right? So when times are good, Bitcoin's going to do well. When times are bad, people are going to spend their Bitcoin to buy food and rent, right? So Bitcoin is a financial index, and it is the broadest, most diversified financial index in the world, right? There is nothing else more broad than world money, but it still has, right now, the trade of our generation, 40 to 50% annualized growth if you take a 4-year CAGR. That is insane. So the NASDAQ, which is just like the thing you wanted to be in over the last 20 years, right, is up 28% this year. Okay, Tesla and the other outperformers will outperform the NASDAQ index. But you can't just buy one stock because stocks are risky. So you have to diversify, so you have to go into an index. Bitcoin as an index is the index to get into, right? But it's outperformed. Doja's outperformed it a little bit. But look, MSTR, crazy. Look how volatile they are, right? When MSTR was getting very hyped up, 3-4 weeks ago, so people get in, and then the thing has literally drawn down 33%. MSTR is leveraged Bitcoin. When Bitcoin literally dropped from that level, Bitcoin has literally dropped 2% from the high in MSTR, and MSTR is down 30%, right? Know what you're getting into. You can't build a skyscraper off MSTR stock. You can off BTC. Now, I know in some countries you can't even buy BTC. They won't let you buy the ETFs, like in the UK. Absolute madness. So MSTR is like the only thing you can buy. So this is why that volatility comes. But know what you own and why you own it. Diversified index to build your skyscraper off that, to build your base off that. This is the sweet spot trade. What we're doing in Bitcoin is just accurately pricing the world over time. That's all we're doing because it's a measuring stick that's fixed. Everything is mispriced. Housing is mispriced. Stocks are mispriced. All our pension funds are mispriced. The UK coming out and saying, we're not going to tell you who we're bailing out because that would create a run on these pension funds. So great news. We're just going to bail out the system, but we're not even going to tell you we're going to do it this time. How insane is this? So you can't reprice the system from inside the system. No one wants that to happen. No one wants their house price to fall 80%. All the pension funds now getting bailed out. It's economic communism. You're printing the currency to bail out pension funds without telling anyone, pulling the wool over everyone's eyes, saying, we're not even going to tell you that we're bailing people out now. What is a bailout? It's when they print money and debase your labor and your savings to bail out the system. Right? You can't reprice it from that system because that system doesn't want to get repriced. It doesn't want to fail. No one wants it to fail. No one wants their house price to go down. No one wants their pension to go down. It makes sense. So you have to reprice it in another way. And the way that governments reprice is repricing your purchasing power versus assets. That's why house prices are going up, because you get poor by not being able to afford things. You don't get poor by just not having work. You get poor by having to work even more and more and more and not being able to afford stuff. So we're repricing everything right now. That's why gold is up so much this year, is because China are revaluing their currency versus hard assets like gold. So they're making themselves poorer. They've had a huge downturn. Everything is mispriced in their economy, including housing. And so they're having to essentially reprice themselves and take a step down in their purchasing power. But it's purchasing power versus desirable assets. They're repricing their currency versus gold. You can't reprice it versus America, because then you get into a trade dispute, and two currencies together and the exchange rate between them just has to account for the balance of trade between those countries. But how do you actually get poorer? You have to reprice your purchasing power, and China is doing that now. Gold is up, which means people holding that currency have got poorer because they can't buy as much gold. And in the rest of the world, I believe this will happen with BTC. The way we are going to reprice that system by making those people poorer, right? Because that's what has to happen. You do that through BTC and they can buy less BTC over time. And that's why BTC goes up in price versus dollars. But what we have to do as young people is make sure that we're in BTC and not anywhere near that fiat currency system. So we can actually get our labor and save it in that. And then we can afford things over time as those things become cheaper in Bitcoin terms. This is the trade, right? Today's downside risk in stocks, BTC Gold, and spike in 10-year UST yields is likely nothing compared to what will happen if Doge unwisely tries to cut government spending. The reason government spending is so high and reason debt is so high is because if they didn't stimulate the economy to inflate prices, everything would fall down because the price level is wrong. Okay, these people shouldn't have this kind of wealth here. They pumped the prices up and now the wrong price. Everything is the wrong price. So how do you tell those people that own pension funds and own houses, hey, by the way, your house needs to fall 80% in value? Sorry, they're not going to allow it. They're going to vote for people that don't allow it. So the way you reprice is through the free market and making all of that stuff cheaper in Bitcoin terms. The Fed and other central banks cannot actually manipulate reality. Wealth creation, demographics, age of workers, how much energy that we need to produce things, right, and have goods and services in the economy. What they can do is manipulate markets short term, and that's what we got this week. Look at all of this. This is the futures market expectations of Fed policy. This is what they actually do, right? Now you may say, wow, these people are so dumb, they can't even predict. It's not even about that. It's the fact that the Fed and other central banks literally control markets through what they say. Right? So looking about the Fed, right? They control banks. They control the amount of dollars in circulation. They control the price of dollars. So they control markets. They can do anything they want. Now, when they come out with policy and say, hey, you know what? We're actually not going to cut rates as much as you thought we would. Well, as a market participant, you can say, I don't believe you. But as a bank, as a big trader, you want to take that risk? Maybe not. So maybe the Fed says, hey, maybe you should change your future projections a little bit. And they say, oh, okay, all right, we'll do that. We don't want to take the risk. We want to hedge out some risk, right? So that's how they manipulate markets. And they did it this week. They just said, look, guys, slow down. So the market slows down a bit. But they can't control reality, which is there is so much debt, right? And if they don't drop rates next year, that debt will get bigger and bigger and the interest rate more and more, and it gets worse and worse. So they can't control reality. So they will be cutting rates next year. We're still way too high. But this week they just said, calm it. And so that's what the market did. They control everything short term. We don't have edge in that market. Think longer term. Think about demographics. Think about what's happening. That's where we have an edge. 2024 crypto industry insights. A lot of people saying alt season, look, if they cut interest rates a lot next year, alt season potentially. I think Bitcoin is the best risk-adjusted trade here. Ton's up 177% year to date. but it like dumped like 20-25% the last week or so. So it's actually probably underperformed Bitcoin now. Solana hasn't outperformed BTC this year, which is pretty insane to actually look at that. Neither has Ethereum, right? BTC is the best risk adjusted trade in my opinion. But look, we may be going into phase 2. Phase 2 is alt season. I get it, altcoin market share. But think about what that means. It doesn't mean that the small amount of altcoins that are popular are going to outperform BTC. It just means, as we're seeing every week, you get new projects coming in, right? New tokens created, billion market cap here, 2 billion market cap there. So how do we take advantage of that? Because those coins are already coming to market at high valuations these days, right? In the past, you used to buy altcoins, they used to come in tiny valuations, 50 million, 80 million, right? That could easily pump up during a bull market. Now you've got pudgy penguins coming in at 2 billion market cap. I mean, what on earth? You can't buy that. 2 billion. What's going on? It's crazy. All right. So in an alt season, maybe it goes up, and well, you can't build your skyscraper off of that. It's nonsense, right? So yeah, altcoin market share grows, but you have like 500 new projects coming in, and so yeah, of course it's going to grow because you're measuring this one thing, Bitcoin, against literally an unlimited growing amount of market cap. Right, so I don't really get it, right? I don't really get it. Like, what are we doing here? Are we speculating on prices, or are we actually building a real base and understanding that the biggest trade of our generation is this macro trade and this wealth transfer? So look, like altcoin outperformance also is getting really cut in as well. Like share of growth, 65% in 2018, then it was 55%, now it's 42%. Like, I just don't see it. Again, I'm not a Bitcoin maxi. I just think it is the solution to this biggest trade that we've ever seen. Right? And altcoins, look, have a bag of them, fine, but that's not what I'm here to kind of tell you about. Build a base. BTC, I think, is the answer. The Fed coming out this week and telling everyone, look, go risk off for a bit, like don't go crazy. And then the government shut down, right? This was the original spending bill, cut down to 116 pages. This one was rejected. This is profligate spending. It has to just go through. It's going to be a risk-off period while we sort this out. A potential government shutdown, probably not a bad thing, to be honest, in the big scheme of things. But look, next year, this is the interest expense that is expected, okay? So this is the issue. And they have to refinance this, right? They can't default on the debt. It's not going to happen. So what it means is the Fed are going to have to help the Treasury refinance. And if you don't cut interest rates, then you'll be paying 4%, 4.5% on this debt. Instead of, if they cut, they might be trying to get that a little bit lower, refinance at 1.5 to it cuts the interest expense. They will be cutting next year. So we continue in the bull market and you buy dips in bull markets. If you trade Bybit deposit bonus up to 30K, or if you trade from your crypto wallet, a little bit more professional, you can get a 5% fee discount on Apex as well. But we're still in the bull market. I'm James, this is Money GG. Cheers for watching, and I'll see you in the next one.